Trade wars, many argue. Others would say that the government has overborrowed and is overspending. So what has Turkey actually done to address its concerns? It's actually managed to say that the economic growth rate has been revised down to 3.8% for this year and then 2.3% next year. It did please some investors, it did please some analysts and economists as well. People have different views about how this government is dealing with it. Let's speak to one analyst now to tell us his thoughts exactly on it. I'm joined by Jared Irving, fund partner at Arch Emerging Markets Partners. Jared, thanks so much for your time. We appreciate it. Something like this happening where a country has to revise down its economic growth forecast scares investors, some would argue. What are you seeing in terms of FDI reaction to what's happening in this country?
Personally, I think there's a lot of positive behind what the government announced last week. I think the targets they've set themselves are realistic. They're based on economic facts. And I think it's a realization that Turkey will, for the next 12 months, go through some difficulties, acknowledging that and looking for mid-term policies that will eventually get Turkey back to sustainable growth.
What are investors looking at during times like this in the country?
Firstly, I think we would like to see some stability in the currency. There's been far too much fluctuation over the last 4 or 5 months. Myself, until the end of the year, I'd like to see the lira stabilize somewhere between 6.2, but more stability is important for me than what that actual number is.
Stability is something we hear in South Africa as well, especially from foreign direct investors and FDI in particular. Our president's working very hard to get more investors in the country. Turkey, of course, has ties with countries across the world. Let's talk about the impact, though, on those trade wars, particularly that of the US imposing those tariffs on Turkish goods. How is that damaging emerging markets in its entirety?
I think generally the world is nervous about emerging markets with trade wars going on. Obviously the largest trade war is with China. We've seen the new increase in Chinese tariffs. How that will play out this week, I think we need to watch and see how it goes. Certainly it doesn't look like there's going to be any easing up of tensions between the US and Turkey or the US and China and other trade partners. Personally, I think we would very much like to see trade wars ending. It's not beneficial for the US or any other economy to see trade wars. Let's just see where stability comes from. Hopefully some cool heads will prevail.
If those cool heads don't prevail, because we're talking about Donald Trump, the US president, and Recep Tayyip Erdogan, the president of Turkey, two bold leaders who are fierce in their style and approach, how do emerging markets protect themselves from this clash?
I think the Turkey-US clash, if you generally look at the steps that the government's made in the last week, there's been some very positive steps. There were some meetings with US businesses. Today there's been some very positive announcements between Turkey and the US government and US partners, German partners. I think the Turkish government, certainly in the last week, has been making moves in the right direction to see some more stability, more investment, more confidence into the Turkish economy. Hopefully that will settle things down. I think for the other emerging markets around the world, Turkey is just one factor. We have Argentina, we've got the trade wars with China, South Africa itself has other issues, so it only takes one problem to set the markets racing, but hopefully that won't be Turkey.
Yeah, and that of course has ripple effects on everyone, as you mentioned. I want to talk about consumers because that's the most important part of why we're actually having this conversation. People actually do feel the pinch of this. Inflation's up 18% in Turkey. That's a 15-year high. Interest rates have been increased dramatically as well, which means people have to pay more for their loans.
Yes, and I think the government announced they're expecting inflation to hit 20.6% this year with a peak in October. So it does. Inflation will significantly affect consumer markets. Retail spending will definitely come down. Inflation hurts people. And as you said, interest rates, a lot of people in Turkey have actually borrowed in dollar and euros, which is making life very expensive for their balance sheets. However, hopefully we can get some stability into the currencies. We can level out inflation next year, which was obviously the government's aim. Its target was actually, I think, 15.9% for next year. That's still a relatively high interest rate here. They have acknowledged that this is not going to be a quick fix.
Right, thank you so much for your time. We appreciate it. That was Jared Irving, a fund partner at Arch Emerging Markets Partners here in Turkey. Jeremy, of course, it's a situation that's unique to very different countries, even though it all connects us in some way because we all feel the impact of what's happening in these emerging markets. Turkey, of course, says it's on the right path because it has revised down that economic growth rate. Some say this is the calm before the big storm because it will suffer next year more than the rest of this year. We'll be watching it very closely as we continue our coverage right here in Turkey, Brazil, of course, and Argentina.